Hello friends, first of all, welcome up all of you in this video lecture series of 12th Commerce Secretarial Practice. Before starting this lecture, I just revised what we studied in topic number 3, that is issue of shares. Up to this lecture we studied introductory part of the topic, then classification of shares, next methods of pricing of shares to the public, fixed issue method, and book building process. So the next concept, that is methods of issue of shares. First, public issue or public offer. In that, initial public offer IPO and further or follow-on public offer FPO. So first of all, IPO, initial public offer, refers to the process of offering shares of company to the public for the first time. That is IPO, initial public offer. A new company or an existing company which had raised its capital earlier from promoters or other investors may offer its shares to the public when it is in need of fresh funds. The company offer its shares to the public first time is called as initial public offer. कंपनीनं पहिल्यांदाच जर शेअर्स पब्लिकला इश्यू केले असतील तर ते IPO मार्फत किंवा इनिशियल पब्लिक ऑफर असं त्याला म्हटलं जातं. बिफोर IPO अ कंपनी इज अनलिस्टेड. बिफोर IPO अ कंपनी इज अनलिस्टेड and its shares are held privately. But after IPO, a company becomes listed and its shares can be bought and sold in secondary market or in open market. So there are two concepts, that is offering of shares. Offering of shares means selling of ownership of shares by company to the public. That is offering of shares. And next concept, that is listing of shares. Listing of shares means listing of shares of the company in any one of the stock exchange in India. That is listing of shares or listing of company. A company can make IPO or initial public offer through fixed price issue method or book building method, which we already studied. What is meant by fixed price issue method? In fixed price issue method, the price of security and quantity offered is given in the prospectus. Then what is meant by prospectus? Prospectus means an invitation sent by company to general public at the time of issuing shares. And next method, that is book building method. In this method, the issue price and quantity of issue of securities is not given, and which is decided on the demands of the people or a society or investors, that is book building method. So why company require IPO? Why company require IPO? For expansion, for meeting the expenses, for funding working capital requirement, fixed capital requirement, for meeting the expenses of issue of shares, for expansion purpose, to fulfill the need of the capital or finance, company go through the IPO. The next point is regulatory authorities for IPO: SEBI, Security Exchange Board of India, Companies Act 2013, and Securities Contract Regulation Act. Eligibility requirement for IPO. First eligibility is a company has a net tangible assets of at least 3 crore rupees in each of the preceding 3 full years of 12 months each, out of which not more than 50% are held in monetary assets. Means company must have tangible assets of rupees 3 crore each in previous 3 financial 12-month year financial year of 12 month each, and the assets are not more than 50% which is held as a monetary assets, not more than 50% assets as a monetary assets. Next eligibility condition, it has a minimum average pre-tax operating profit of rupees 15 crore. Pre-tax operating profit means tax profit before tax. Average profit before tax 15 crore calculated on restated and consolidated basis during 3 most profitable year out of the immediately preceding 5 year. पाठीमागच्या 5 वर्षापैकी 3 वर्षामध्ये कंपनीचा प्रॉफिट बिफोर टॅक्स PBT हा 15 करोड as an average असला पाहिजे. A company must has a net worth of at least 1 crore rupees in each of the preceding 3 full years of 12 month each. जे इयर आहे ते कसं आहे 12 month each आहे. The year is 12 month each. Next condition, eligibility condition, the aggregate of the proposed issue and all previous issue made in the same financial year in terms of issue size does not exceed 5 times pre-issue net worth as per the audited balance sheet of the preceding financial year. The aggregate of the proposed issue and all previous issues made in the same financial year. The aggregate of proposed issue and all previous issue made in the same financial year in terms of issue size does not exceed 5 times its pre-issue issue net worth as per the audited balance sheet. And what is meant by audit? What is meant by balance sheet? Balance sheet, that is the annual financial statements which shows the liabilities and assets of the company at the end of year. Audit, that is careful examination of books of accounts by an independent person, that is audit. So the aggregate of the proposed issue and all previous issue made in the same financial year in terms of issue size does not exceed 5 times its free issue and net worth. Next eligibility condition, if the company change its name within last 1 year, at least 50% of the revenue for the preceding one full year has been earned by it from the activity indicated by the new name. जर कंपनीचं नाव चेंज केलं असेल तर जो रेव्हेन्यू कंपनीला मिळालेला आहे त्यापैकी 50% एवढी रक्कम ही नवीन जे नाव कंपनीनं स्वीकारलेलं आहे किंवा नवीन नावानुसार नवीन नाव कंपनीनं स्वीकारल्यानंतरचं ते मिळालेलं 50% रेव्हेन्यू असलं पाहिजे विदिन लास्ट 1 year. दिस इज द ऑप्शन फर्स्ट ऑफ एलिजिबिलिटी कंडिशन. Next, option second. An issuer not satisfying the above 5-6 conditions may make an initial public offer if the issue is made through book building process and the issuer undertake to allot at least 75% of the net offer to the public, to qualified institutional buyer, and to refund full subscription money if it fails to make the said minimum allotment to qualified institutional buyer. Means if the above condition is not fulfilled by any company but company still wants to issue the shares through IPO or securities through IPO, so at that time company must go through book building process and the issuer means the company undertake to allot at least 75% of net offer, that is total. If company going to offer 100 crores of shares, so 75% of that amount is issued to the public. 75% of that issue is issued to the public, to qualified institutional investor, and to refund. And if company unable to make an issue and fails to fulfill the above condition of 75% of net offer to public, then company must refund full subscription money if it fails to make the said minimum allotment to qualified institutional buyers. Next, issue size. Number of shares into offer price and issue size consist of promoters contribution, net offer to public plus reservation. Issue size consists of promoters contribution, net offer to public and reservation. Then what is meant by promoter? In 11th standard secretarial practice we studied stages of formation of joint stock company. So first stage, that is promotion stage. Promoters are the persons who take initiative, who discover the business idea and take lead for the formation of company known as a promoter. So the promoter contribution, net offer to the public, and reservation. All these things consist of issue size. Issue price, face value plus premium. Next, participants in net offer to the public, qualified institutional buyer, non-institutional investors, retail individual investors. Reservation, reserve categories, employees, shareholders, associated persons, and issue management team service providers. Next, debarment. The issuer company, its director or promoter should not have been debarred by SEBI to access the capital market through any of its previous order. Means, due to some illegal activities, unlawful activities of directors of that particular company, if SEBI is debarred and send the name of that particular directors of the company in blacklist, so these directors are not, must not be debarred by SEBI by any previous order. Next, appointment of merchant banker oblique book running lead manager and other intermediaries. The issuer company shall appoint one or more merchant banker, at least one of whom shall be a lead merchant banker, and shall appoint other intermediaries in consultation with the lead merchant banker to carry out obligations relating to the issue. Next, agreement with National Securities Depository Limited and Central Depository Securities Limited. The issuer must have entered into agreement with NSDL CDSL, offering the option to the investors to apply for demat shares. Demat means, what is meant by demat? When shares are preserved in the form of electronic form, it is known as a dematerialization or demat form. If today if you want to buy a share, you are required to open a demat account with any broker, which is the broker is entered an agreement with NSDL or CDSL for the purpose of demat services. Demat means, dematerialization means offering the securities in electronic form to investors, that is dematerialization. Next, minimum allottees. The issuer company must ensure that there must be minimum of 1000 allottees in the public issue, falling which the amount shall be refunded. If minimum allottees, ज्यांना कंपनी शेअर इश्यू करणार आहे ते जर अलॉटमेंट जे अलॉटीज आहेत ते जर 1000 नसतील तर कंपनीला पैसे रिफंड करावे लागतील. नेक्स्ट, in principle approval from stock exchange. The company must obtain in principle approval from the stock exchange where the securities being offered to the public are intended to be listed. That is listing of shares, which I already told you, that is registering the shares of the company with any of the stock exchange in India. Partly paid up shares. Then what is meant by partly paid up shares? We discuss the concept of paid up share capital, partly paid up share, unpaid share. If the value of share is 10 rupees of each face value, but the shares out of which any investors paid only rupees 6, so the 4 rupees is unpaid share. So these shares is known as a partly paid up shares. The issuer company shall not have any partly paid up shares before submitting of draft prospectus or draft red herring prospectus to SEBI. Then what is meant by draft of red herring prospectus? Red herring prospectus is a kind of incomplete prospectus include incomplete particulars of the quantity of securities offered and the issue price of securities. This prospectus is issued only in case of if companies go through the book building process, that is option number second. Filing of offer document. The offer document or draft of red herring prospectus must be submitted to SEBI at least 30 days prior to submission of offer document to the ROC for registration. And what is meant by ROC? Registrar of Companies. When we studied the concept of ROC, 11th standard, other requirements: promoters contribution, issue price, underwriting. Then what is meant by underwriters? One of the intermediary required for public issue underwriter. Underwriters are the persons who take a guarantee if company does not collect minimum subscription amount through the issue. So these persons take guarantee that they buy unsold shares of the company to complete the condition of minimum subscription amount, known as underwriter. This concept is very important. Call money, subscription list, issue opening date, minimum subscription amount, and due diligence. Pre-issue advertisement of right issue, mandatory collection centers, reservation, appointment of compliance officer, basis of allotment, chore investment, application supported by block amount, that is ASBA. So the next process of IPO. These things is not covered in our textbook, but if question is asked for 10 marks, explain IPO and FPO. So at that time you have to draw a process along with provisions. So the first, approval of shareholders by passing special resolution under section 72 for IPO and FPO, further public offer, that is shareholders approval through special resolution. That what is by special resolution? The resolution which is passed by 75% of majority, known as a special resolution. Conducting a board meeting for appointment of intermediaries for primary market. Primary market, what is meant by primary market? Primary market means the market which is in which the primary market in which the securities are first time sold, that is primary market. And what is by secondary market? That is existing securities are bought and sold, known as the secondary market. Then which intermediaries are appointed? That is underwriters, preparation of draft of red herring prospectus by book running lead manager. When company go through the book building process, the company must require for issue of shares, for issue of securities, company must require to prepare draft of red herring prospectus. So the draft of red herring prospectus is prepared by book running lead manager. Submission of DRHF, that is draft of red herring prospectus. Then what is meant by red herring prospectus? This concept we studied in 11th standard. which is given in page number 57th of 11th standard secretarial book. Along with the due diligence to SEBI, certificates and other documents to SEBI and stock exchange simultaneously. Submission of DRF along with the due diligence to SEBI, certificates, other necessary documents to SEBI and stock exchange simultaneously. Obtain in principle approval of stock exchange and submit to SEBI. Obtain final observation of SEBI on the DRHF, that is draft of red herring prospectus. And what is meant by SEBI? Security Exchange Board of India, which is the supreme authority in India to regulate and control the stock securities market in India. Conduct board meeting and approve red herring prospectus by all directors, appoint bankers, underwriters, syndicate members to the issue. Register red herring prospectus with the registrar of companies. The next process. Next, ensure that amount has been received from the reserve category mentioned in the upper document, that is prospectus. Circulate copies of red herring prospectus and bid cum application form to the investors. Open bank account with branches of bankers to the issue. Announce floor price and price band 1 or 2 days before opening of the issue. Deposit 1% of issue size as a refundable deposit with the DSE before opening of public issue with DSE. Opening the issue for subscription. Next process, opening the issue for subscription, that is for buying purpose by investors. Closing the public issue. Next, finalize the basis of allotment, whether the issue is on pro rata basis or other basis of the issue of securities. Submit the return of allotment in form PAS3 with the ROC. Register the final prospectus in which the issue price is mentioned with the ROC, and make application to the stock exchange for listing of securities or securities of the company. So this is the process of issue of shares through IPO. Okay, for your kind information, the procedure or all other points, that is conditions, eligibility criteria, is not given in our textbook, but for examination purpose this concept is very important. So I try to cover here all the points which is required if question is asked on IPO for 8 marks, and one thing is remaining, that is some provisions are remaining. So these provisions are covered in next lecture. Thanks for watching. After watching this video, you have to write down all the 19 points procedure and eligibility criteria for issue of securities